What's up, Outliers? Happy Monday. Pretty interesting day out there with a few very key pieces of news that we are going to talk about today. One of them is on the screen right now. Actually, didn't have a chance to start looking through this yet, so I'm eager to see and understand a little bit more the recent announcements regarding Tesla's robotaxi. And then the other big piece of news stems from the Iran-Israel/US conflict. And this actually has led to some of the more profound recent changes that we've seen in oil prices, which has been massively tradable. The oil futures right now are showing down 4.5%. Gold is down 1.25%. Bitcoin up 2%. VIX down 2.9%. NASDAQ, Russell, and E-minis all are up right now, which is actually also kind of interesting because they're being led by the Russell. And the Russell's been the weak one of the group by far. Now, let's start with kind of the easy one, I suppose, which is the ceasefire. This looks like one of those instances where the market had this completely correct, literally completely correct. I made a post about it earlier that I thought was like genuinely entertaining. I made a post, I think it was on X. Let me see when it was, because it was 7 hours ago. So this is when Walter Bloomberg posted that Iran launched attacks targeting Qatar and Iraq. And the markets literally were up. And I actually found that to be extremely telling, extremely telling. The fact that the markets were rallying despite that going on, to me, told me that the market itself really was not that concerned with what this conflict is, where it was at, and then obviously an expectation of some sort of less impactful resolution. This is one of those cases where the market, it can be really good as a guiding feature, honestly, to analyze information that's coming out, because at face value, seeing that original tweet from Bloomberg, I'm sitting there thinking like, okay, yeah, this is obviously going the wrong way. This is escalating. However, the market is pretty detailed and it's good at pricing things. Thor, stop that. So because of that, the market led me to reassess the initial reaction that I had. And sure enough, the market seemed to have some pretty good ideas. So let's see what the latest is. This is from AP in Dubai. It says Trump announced Israel and Iran agreed to a complete and total ceasefire soon after Iran launched a limited missile attack on a U.S. military base in Qatar, retaliating for the bombing of the nuclear sites. So, Thor, stop that. So the reason why this is interesting is because the way this whole thing went down, it shows how much just showmanship is going on. The U.S. makes this attack with B-2s, bombs a few spots, and then the U.S. first postures and says any sort of attack against U.S. interests will be, it'll just lead to pretty significant escalation. And that leaves Iran with essentially no way out. There's no real way out of that. Because if Iran doesn't do anything and they just get punched in the lip and they don't do anything, that absolutely devastates their sovereignty after somebody bombs them on their soil. So then the fact that they opened that up and essentially said, if you attack back, this is going to lead to an escalation. But then the U.S. obviously had a backdoor conversation with Iran, because Iran communicated to the U.S. that they were going to attack some of these spots, which led to us leaving those spots. and then the attack unfolding with preemptive warning. So that clearly is just all showmanship. That's Iran essentially saying, like, listen, we got to do something here. Otherwise, we look exceedingly weak. So let's agree for what we can do here. And that's essentially clearly what happened. So I think this broadly circles back to what makes the most sense, which is some sort of broad scale conflict over here. That it just doesn't help anybody or anything. And I think the reason why the US got involved is to show Iran that they're going to have to do something, because Iran was obviously very comfortable continuing the conflict with Israel. And Israel was happy to play the game as well. So by the US entering the conversation, player 3 enters the game, the dynamic changes a little bit. And now we are seemingly at a ceasefire. So the market effect here is pretty interesting. If we take a look at just the broad market effect, we got to go to the futures here specifically. And if you take a look at crude has had one of the most insane moves that I've seen in crude oil for some time now. So zooming in on this, you can see that we rally from 60, we get up to the mid 70s, we almost crack 80, and then we now have one of the largest intraday then follow on 2-day sell-offs that effectively that we've seen in recent history with crude. Massive move. This also comes from a very clear priority of Trump, who does not want expensive oil. He's made that super, super clear. And this is some level of partial alignment there. So what's the tradable output here? I see a few things. One of them is it does seem like this is going to be a weight off the market shoulders. You can see that things are rallying right now. I actually have some long Russell futures on, just playing this after hours move. And we'll see how it actually ends up panning out. But right now the Russell is leading the pack, and that is an important data point because it shows a broader underlying shift. Because if you take a look at the Russell's been the underperformer for some time now. NASDAQ is within striking distance of all-time highs. E-minis are within striking distance of all-time highs. NASDAQ is still a ways off even from the 2300 handle, with it trading around 2166. So this clearly has a lot of ground to cover. Volatility is rejecting. I did not get my short vol trade on because we did not get enough overextension to the upside for me to be able to do anything, which is unfortunate because that is a standard go-to idea for me. But alas, other plans in place here. There wasn't really anything that looked too good to me. Now, one quick admin note for those that are watching this live, we found a way to essentially be able to let people dial in to the stream. So if you're in the Discord and you want an opportunity to dial in, I'll have time a little bit later for open Q&A. But all you need to do is go into the chat room, the voice chat room in the Discord, which it's free for everybody. You can go into the chat room, and then effectively I can join and then stream the conversation from there. So it comes through here. So there's a way for us to do kind of like live Q&A and conversation, which I want to start integrating into these. So this first one, it'll be obviously working out the details. But if you are interested in doing that, you can let me know in the chat. So then I'll monitor the chat room in the Discord. But again, we'll have time for kind of like the Q&A segment, like maybe 15 minutes. I just want to get through the rest of the straight up material. Hey, yo, what's up? Lauren TCM King says, howdy. I don't usually watch live. You catch them later at 2x. Yeah, that's kind of the standard, I actually think, for a lot of people, because most of the live streams, funny enough, they get most of their views in the recording side of stuff. which leads me to believe sometimes I think I might try another pilot soon where I literally just do more videos instead of the live streams. I like the live streams because I actually just enjoy hanging out with you guys. It's more fun than creating videos. But unfortunately, live streams don't do a lot for the channel in terms of growth. The YouTube algorithm doesn't really promote live streams, which makes a lot of sense. All right. So let's take a look and dive into our next key piece, which is what are the tradable effects here? First tradable effect, I think we noted, is the Russell. Okay. Next tradable effect is still the continued move in crude. I don't think crude is fully done. I'm short futures. I think that there's still probably downside, which is likely to be like the 60s, low 60 handle. And that's about where I'm expecting it to be. So I have a short that I'm running in there right now that I'll continue to let that go. But I think short oil is another spot. A couple others, I think gold is reeling back a little bit right now. I think this largely comes from the risk on, risk off relationship, because if we take a look at ETF flows for the day, which I haven't looked at yet, but my guess is that we will probably see capital inflows. That would be my guess. Capital inflows, essentially across the entire board. So yeah, about as expected. So what that tells me is just there will be some money that's positioning more risk on. And that's kind of the cool part. Again, one of the things that people, I've heard a few people say is like, oh man, like they're so tired of like the news cycle. It's too much. They can't keep up. But the reality is there's actually some significant benefits to the way that the news cycle is with Trump, the administration, and in general, is that it forces stuff all over the place. So the whole game of like deep insider information will always be at play. But this kind of flow of information does level the playing field to a degree, because I've said this before, it just becomes an equal game of like, nobody knows. So the fact that this morning Iran was shooting missiles, and that this afternoon / evening, depending on if you're East Coast time, that there's now a peace agreement, right? It's kind of crazy. Normally, there would at least be a couple more days in between those, I would imagine. So this also means that I think the broad market attention shifts a lot. I think the market will start to shift its attention more so to the Fed picture, and then we're coming up on another earnings cycle, which starts in a couple weeks. So that'll likely be the more dominant direction that we see things now starting to focus. Okay, so now let's take a quick look at the robotaxi. Kill these. The robotaxi is really, really interesting. It's one of those things where it's fun to see the kinds of ideas that Tesla dreams up and what this could look like. It's obviously still very much in its infancy, just like autonomous driving. The reality is autonomous driving is still a long ways off. Even though out here in California, you'll see a bunch of Teslas that are on the highway doing a great job managing that. And I do think the technology is developing rapidly. But with how unscripted so much of this is, meaning day-to-day driving, it is something to pay attention to. A great example of this, I had a buddy out visiting, and we were driving the new Tesla performance model, whatever that one is, I don't remember. And I was tinkering with it because he knows I'm a gearhead. I like cars. I build cars. I drive cars. I have a car club. I like cars. And I was driving it, and the automated driving is just very impressive what it can do. However, the thing tried to fucking kill me and 3 other people in the car because it had it didn't do a good job analyzing actually a other bad driver. So what ended up happening is we were coming on the on-ramp. The extra lane to the right was gone because of construction. It had like one of those cement barriers. So we're getting ready to come on the highway at a pretty good rate of speed. And then there's somebody in front in that lane that we were merging into. And then there was somebody directly speeding up along the merge lane that we should be getting over. And the car literally had us accelerating into this trifecta where there was a car in front of me, the guardrail to the right, and then a car that was speeding up to the left. So I don't know if/when the Tesla was going to correct. I was monitoring pretty closely, so I gave it as much time as I felt comfortable before intervening. And I ended up having to get on the brakes like pretty damn hard because I waited a while to see if it would intervene, and it hadn't at that point. So who knows? Tesla, the car itself might have had a very last second intervention, come on the brakes even harder than I did. But all of the passengers got pretty jostled because I was explaining to them what I was doing, and they got pretty jostled when I made the correction myself. So all of that's to say, one single anecdote. We drove that car most of the time that he was here, and most of the time it was fantastic. But that's the problem. That's the issue that automated driving faces. It's not the fact that it's going to get it right 95% of the time. It's that it's going to be judged on the 5% it gets wrong. And that's a difficult threshold to get over as a company. That's not easy. So I think the technology itself is fascinating. It's well developing, but yeah, it's likely going to take a little bit of time to come through. So first, I'm literally just going to click through anything that I see different here. And then I want to just see what the news cycles are. Like, this stuff is cool because here's the other thing to keep it G. If you use Uber or Lyft, that shit it genuinely is a roll of the die. It is literally a genuine roll of the die who you get. I've had some really awesome drivers. I probably have had equal number of not good drivers, and I don't pick the cheap option when I use them. I'm typically picking one of the more expensive choices. So that's just to deconflict. Sometimes people, when I will tell them that kind of thing, they'll say like, oh, that's just because, you're doing like the economic one. And it's not the case. I'm typically not. The point I'm making here is that I imagine the standard ride quality is going to go up massively across the board. Because if you can successfully automate this, that does make a big difference. I would use the service. Now, I would use the service once it's fully stabilized, because right now there's no way that I would feel comfortable getting in the back of an automated driving vehicle, unless, like, if I was going a short distance, sure, who cares? But I'm thinking stuff like going from my house to like the airport, where you're spending a decent amount of time on the 5 in California, which for those that don't know, it's a fast highway. It's not like the Northeast style highways where the speed limit's like 55 and people speed at like 65 or 70. It's literally like the flow of traffic typically is 85. And like, that's not even being dramatic. It's literally like 85. So the issue with that is that the margin for error goes down pretty significantly, and the repercussions for a mistake go up significantly. So I think that's going to be one of the bigger issues that they face is like, if I were to use this kind of service, it would only be in like short little local stuff out of curiosity. And there would have to be some sort of eject button, which I don't know if there's a thing. That's actually what I want to see right now. Like this. No, that's how to, I want to know if there's a way to like, yeah, this. In an emergency, tap pull over vehicle's touch screen. Your vehicle will stop at the nearest safest location. Yeah. So that will be something I would be very interested to see how well that actually works. But let's see. So this is from Engadget. It says the first robotaxi rides are running into a few bumps. Tesla launches robotaxi service over the weekend. Only a small number of cars, heavy human supervision on and off the road, exactly as you would expect. While less impressive than previously promised, the company's caution ultimately seems for the best. I don't know why that would be unimpressive. Like, that makes total sense to me. At least one robotaxi attempted to drive on the wrong side of the road based on a video posted to X and spotted by Bloomberg. The ride video shared by Rob Marr is largely uneventful. Tesla navigating turns merges few issues except for around 7 minutes or so into the ride. This is the issue that they have is, again, it's going to be these small little hurdles like this that make it more difficult for this to work. Now, zooming out, though, there's a really, really interesting opportunity where if we look at what this means for companies like Uber and companies like Lyft, they're effectively on notice. And Uber itself is really not in a super great position right now. And they're going to need to pivot really quickly in order to be able to make this broader thing work, which I haven't seen much of the news around Uber and how they're attempting to deal with the rise of the robotaxi, because their model really isn't built for adaptation or taking up the robotaxi business model. So I don't see them as an operator for it. They could be, or they could be consumed. But even that, the main benefit to a company like Uber is that they get to offload a lot of cost and risk because you're essentially using contractors. You have people that are operating their personal vehicles, and that decreases a ton of the logistical burden on the company, which makes it a really slick idea. And I don't see that fully going away. Now, the other thing to keep in mind is I don't actually think that there's going to be some sort of at least several year removal of these kinds of companies, because when I fly relatively frequently, and if I'm going to a normal airport, I almost always see a row of regular cabs still there. So the fact that there's still even regular cabs is kind of crazy. So I don't see the robotaxi taking too much away from Uber, at least in the very near term, although they do have some big strategic decisions that they're going to have to navigate, which I don't imagine are going to be super easy for them. So Josh says, have taken a regular cab when Uber wait times were too long. Yeah, which is like really interesting, right? Like the fact that there's still a market for that kind of thing, because normally speaking, I always preemptively time it, right? Because I know that they wait 5 minutes. So I will order them early, Uber or Lyft. I'll order them early and have them wait. I'd rather them wait for me for 3 minutes than me wait for them for 3 minutes. I'm going to value my time over their time. And that's one of the benefits of the service. But I completely agree, Josh, that there's definitely an opportunity for like still a viable use case for a cab. Because here's one of the other things. I had this a while ago where I scheduled, this is when I was consulting with Deloitte, and I used to fly pretty much every week. And when I would sometimes have to leave really early on a Monday, so I'm having to leave the house at like 5, and I'll schedule the Lyft ahead of time, but then the Lyft driver the next morning will be like, man, fuck that. I don't feel like getting up anymore. Maybe they go out, have too much to drink. Well, the problem is my ride wasn't available, and then there's no other providers in the region. One of the things that cabs do well is like they're reliable if you schedule them ahead of time. For that, realistically, you're better off just using a driving service, but that's a whole other thing When I was working at Deloitte, you can't expense a driving service. So I still think Tesla here, you can see that it really enjoyed that news. And I still have the ratio call diagonal on in Tesla, where my base position is out in 15 Jan 27. So I got tons and tons of time on these. I am short the 18 July 375s on the call side. So those are still okay. No real action needed on those just yet, at least as far as I can see. So those still look pretty good to me. Now, admin note. I'm going to take a look through a few more things, but if you want to dial into the stream, you can hop into the chat room and just ping me in the Discord, and then I'll pop over and then I'll be able to put you on so that you can literally talk live. If there's a question or something that you want to take a look at, just let me know and you will be on the stream. Just like dialing into a show, which is pretty cool. Zach says, what are your strikes for 27? On the calls, the long calls, I'm at the 420s. So let's take a look at where those are at. The 420s are a 59 delta. So I got those when they were a bit lower. And the 18 July, the 375s. So these are underwater a little bit. I sold them originally for 1095, and it's a 1-to-2 ratio. So essentially, I have 50% of the position covered. It's really just because Tesla's been an absolute crapshoot, like massive crapshoot. So yeah, that's this position, which looks pretty good. The Palantir ratio call diagonal is looking good. I am getting to a point though where I likely will need to adjust it ever so slightly. Oops, didn't mean to click that. Let me get that out of the way. Actually, I could just turn all those off. I will likely need to adjust it ever so slightly because of the short call component is not where we need it. So I have two different tranches out of short calls. I have the 140s and the 155s. The 140s are in 18 July. And those were out for 638. So I'm probably going to have to roll those, realistically speaking. And yeah, the 140s, but the problem is that they still have so much extrinsic value and they're only at a 56 delta, so it might not. Stack says, are you back on Discord for the Patreon members? Sorry for the loop. Sorry, I don't follow the question. Sorry, let me know what you mean. Are you back on the Discord? Let's take a look at a couple broad market scans, because that's what I would be doing right now anyways. We're not going to go super deep into detail. We'll do a little bit more of that tomorrow on the pro stream. That's really where I spend most of my time, like actually trying to configure individual trades. I'm mostly going to use this as an opportunity to create short lists for stuff that's likely worth following up on. So what I'm going to do now is start with just a few basic scans. The first one, I'm looking at things that are up the most over the last year. This helps me with like momentum and stuff like that. So TSSI is primary leader, and they're up 1,261% over the last year. So these guys are, I mean, absolutely crushing it. Insane. And let's take a look at the options here. Lauren says, didn't you shut the Discord down for a bit because of the bots? Oh, that's what you mean. Sorry, now I understand, Stacks. And thank you for Lauren for helping me understand. Yes. So the flow is different, though. The way that people get into the Discord is through the free side of the Patreon. It essentially allows us to conduct a slightly better review and have a tighter onboarding process. So it's for free, everybody, to get into the Patreon community. It just adds an additional step to make it more difficult for the bots to get in, because and it's not even bots, really, it's spammers. They're live people that we're trying to scam people, which is super annoying. So Lauren, you're exactly correct. So far, it's been better. We'll obviously keep an eye on it, because if it gets bad again, then we'll have to turn it off. But so far, it's been okay, thankfully. So yeah, thank you for the heads up. I want to take a look at TSSI specifically here. And I just want to get a sense of if there's still like this really broad positive side positioning. Yeah, so this looks like profit taking. Let's see. So nets here, yeah, it looks mostly like profit taking, which with stuff that rallies this hard, you have to expect to see it. I mean, this is just a wild move. But this still looks interesting to the upside, so we'll set an alert. And we'll keep an eyeball here. If there's anything that you guys would like to take a look at, let me know. The other thing that I do want to throw out for specifically those that attend the Friday sessions, the beginner, really the options trading basics, it's coming up on time to like actually reconfigure the series for the next mini series. And I'm not sure what I want to focus on for it. So if you attend those beginner streams on Friday, if there are specific elements of options trading that you want to focus on, please let me know either in the Discord, in the chat here, wherever, because that will give me ideas on what we should do for the next mini series. Because I don't really want to do like a reboot of the actual 101 yet, going back to like the very basics. I just don't feel like doing that. So I want to like focus in either on a key subcomponent and do like a 4 or 6 episode mini series on it. So pretty open to ideas depending on what you might want to look at. Okay, so back to this. Let's take a look at, so again, this is just looking at stuff that's up big over the last year. This I have a position in, but needs some updates. Let's see what these options look like. Yeah, so still pretty good call skew, really, really light options chain. And this is looking at SEZL. I gotta change this fucking boom arm thing. Need to get like one that just sits on the desk. Let's take a look at the options. So the options chain is actually quieting down a lot. Let's take a look at the net premiums. So still super heavy on the call side though. Wow, and a bunch of it's right on the front, isn't it? 18 July, look at that. 928K against 71, 439, and 436. So this is very much in the front end. Interesting. So this gets earmarked. I'm going to add this to my actual watch list. This will be 23 June. And then I actually want to run through the prior names on the watch list as well. For those that don't know, I'll show you what I have. So what I do is, based on the stuff that we talk about, I'll track like a small list of things like this here. And this is really for us to be able to go back and see, like, based on what we looked at and what we talked about, how did things end up moving and reconciling against like what the broader expectation was. So I like to go back through these. I'm going to save this for a little bit later. I just want to finish going through some of these scans, but then we'll take a look. So let's take a look at SEZL, and let's take a look at their premium. Call side 464, 52, 59, and then it flips to put side, but there's nothing here. And then call side 144. So this is also very heavy to the front. SEZL. TSSI is still heavier on the front. And then let's take a look for 6 month. Now, for those that trade momentum, let me move you guys over for a second so I can grab something. I want to grab a piece of a book. I just don't want to have to flip through too much of the book because I try not to. I try not to put too much of that stuff out there because I feel like if somebody wants to read the book, you should support the author if you can. Again, I don't say that in any sort of judgmental way because I went through a phase where I had to try to get stuff however I could get stuff. But I'm at the point now where I don't have to do that, thankfully. And here. Okay, this is the section that I think makes sense. So this is from a book called Quantitative Momentum, A Practitioner's Guide to Building Momentum-Based Stock Selection Systems. This is written by actually a friend of mine named Wes Gray. He's a PhD, prior Marine, so super solid dude. He runs some of the largest ETF funds, over $1 billion of ETF funds. So just wild amount of money. And he loves momentum. He's like very interested in momentum. And in his book, he talks about 3 different types of momentum. There's more than 3, but here are 3. Short-term, long-term, intermediate. And it gives you the requisite look-back periods for these. So short-term is a month look-back. Long-term, 5 years or 60 months. Intermediate is 1 year look-back. And what they do is they start from a really solid position, which is what I always recommend to you as traders, is review the existing research. Anytime that we think about trying to trade something, we should review the existing research. That's what you do in any sort of research-based approach. That's exactly what they do here because it's fucking smart. It decreases the total amount of work you have to do because you can pick up where things have been left off. Okay. So they cite a paper by Lehman, and it says that paper, which is from 62 to 86, so a really long study, but in a dated market regime. It says finds that portfolios of securities that had positive returns in the prior week typically had negative returns in the next week. This is an important effect. If you trade momentum, this is a very important effect for you to be aware of. And then it says those stocks with negative returns in the prior week typically had prior returns the next week. So this is just looking at broad data samples and coming up with general trends, but this is a reversion style approach. Next, by Jagadish. For those that don't know, in terms of momentum, Jagadish has a bunch of papers, a lot of really great work. And it says that they find similar reversal in returns. Last month winners are next month's losers and vice versa. So the effect is large and significant. So there's literally a tradable effect right here. You can trade short-term reversals on momentum. So again, what you can do is you can sort things that have had a negative return over the last month with the expectation of at least some sort of positive recovery return in the following month. And you can test all this stuff on your own. And then this goes further into detail on these different kinds of reversion. So here it's, again, it summarizes pretty clearly. It says key takeaway, short-term winners or losers in the near-term future, short-term losers or winners in the near-term future. Overall momentum over a short time horizon, one can expect to see a reversal in short-term returns. And then as you zoom this out over a longer time, that obviously will begin to change. So the concept of momentum is really important. And when I'm studying stuff like this, there's a really slick way to think about this then. So we can take a look at stuff that's up big over the last month, and then maybe we can speculate that it doesn't necessarily go down, but might not have as strong as a following month, or at least a couple week period if things start looking overextended. So that's one really simple approach. Then you can play longer term continuation ideas and stuff like that. That just gives you some context on like why I'm using the scans that I am, because it walks me into those kinds of ideas based on what the portfolio needs more broadly. Lauren says deeper dive into selling calls and puts. I think that would be good. I think like something about selling options could be really good because a lot of people like to sell options. I think maybe that would also be like a really good series to try to help those in Theta Gang understand like the risk that's in front of them, because a lot of them really don't, I think, fully appreciate what they're doing and the implications of what they're doing. So that could be a really good one. Let's take a look at LEU really fast. So LEU popped up actually from a little bit of research I was doing on nuclear investment opportunities. I posted the summation of that research for the pro members in the Discord, so you could see like the outbrief that I built iterating with Gemini a little bit on the concept. But this stock flagged for a couple different reasons. And it's because they have a very interesting positioning in the broader nuclear theme. So and for those that don't know, this is like the funnest part about the stock market to me, is you get a chance to learn about a ton of stuff. You're never going to be a full expert in any of it, but you'll have a rudimentary understanding of a ton of things, which I actually really, really enjoy. So one of the things that I was learning about today was this concept of enrichment and the concept of HALEU, HALEU, which is high assay low enriched uranium, which is a next generation fuel essential for many advanced reactor designs. So the interesting thing is with this, companies like LEU are actually really, really well positioned because LEU is the central player in the US to solve the HALEU problem. And they right now are one of the, this part right here. Its strategic advantage is that it operates the only facility in the US licensed by NRC to produce HALEU. This gives Centrus a de facto monopoly on the domestic market, making it indispensable partner for the entire advanced reactor industry. So it places it at a really interesting crossroad. So the idea here then to me is, okay, well, let's see what the market is saying inside here, which based on total OI, it's about same. Yet when we take a look at puts, you're noticing a bunch of these puts being sold on the day, which are people either gaining entry via short puts or people that were just directionally wrong getting shaken out. But if we take a look at the actual options chain for LEU, just to see what broader positioning trends we might be able to detect, we can see that the call side is significantly heavier in terms of premium than the put side. So the call side is 2.4 against 1.5, 903 against 543, 825 against 261. So a lot of the puts that I see that are coming out are at really interesting levels. Some of them represent synthetic stock positions to me. But you can see in the longer run that overall call skew continues. So that in and of itself is a pretty interesting skew. Now, if we take a look at the actual, what am I looking for here? This. If we take a look at just some of the random reports that exist, this is one of the things I actually like, by the way, about Thinkorswim, is that it cleanly links to stuff like this. So we can see that there's a pretty long bias, at least from Market Edge. I don't know Market Edge long-term success rate, so I never really look at these individual ones too heavily. I just wanted to pop in and see what they wrote about. More often than not, what I care about is the overall analyst rating, not so much any individual one. So we can take a look at that in one of these two spots, I think. Here. And let's go to LEU. So I don't know how many this is, which is actually kind of important to me. How many is this? 1, 2, 3, 4, 5, 6. 15 entries, but with multiple of them being from B. Riley, the same entity. So this is interesting because when you go back to the momentum factor, a big part of momentum is actually in information discreteness or indiscreteness. And when things are less covered, they tend to have more growth potential, which is actually quite interesting to me. So this looks like it's just starting to gain broader traction on the larger stage, so to speak. And if we take a look at their financials, let's see. So what I'm doing is I'm just getting a sense of where their book comes from. Uranium's 103 mil, contract services 541, product 315. And net income, let's take a look year over year. So Q1 against Q1 is pretty strong. Let's take a look at Q2, 54 mil against year over year Q2, which isn't, Q3, my bad, sorry. Oh no, Q2's here, my bad. This is Q4, Q3. Here's Q2. So Q2 was 31 mil in 2024. 13. So year over year, it's growing. Q4 of 23 was 56 mil, 54 mil. So that's good. Revenue expanding like that year over year is really good. Receivables going up is good. I mean, this looks interesting to me. So we'll keep this on the list. So what is this? 23 June, LEU. This would be like long calls. So now let's actually just poke through these really fast and see how the prior ideas have been panning out. I'm going to move this out of the way so I can just go faster, but you can see what's here now, and I'm just going to flip through them. and see how things are going. So first one is GE. We looked at this on 25 May here, and this was a bullish idea. So really 2 solid exits. That one's working just fine. Next is SMR. This was also on 25 May. So even with the pullbacks, this is still looking absolutely fine. Duke Energy. This was long calls on 25 May. This one I think is a loser. It would have been entry here. So even though it's technically up a little, I still would call it a loser because this didn't go the direction that it should be going. That being said, this looks interesting from a risk premium lens now that I'm looking at it. Yeah. I kind of like this. Oh yeah, that's the other thing I wanted to do. So I wanted to update one of these labels. This one. I want to update this so that I can look at the percentage of time for the window looked at that there's risk premium. So update this script, having ChatGPT do it. Update this script. So in the VRP label at the end, it includes a count of candles where there is positive VRP, then express as a percent. So it should be XX percent and then positive over negative. See how this does. And this is looking at 30-day. All right, see how this goes. 11 out of 19, 37. That doesn't make sense. So this is showing 11 out of 19. However, the chart is a 6-month daily. So right now it's looking back only 30 bars, which that makes sense. So now this new version should get rid of that. The math doesn't make sense. Now it shows 74%, 93 over 33. So I'm having to explain this to me, what it's trying to do. Okay, so it's just doing, yeah, this looks good. Cool. That worked shockingly well. Sweet. I will update the version that you guys have in the ThinkScript library on the Patreon. So I'll post this in there so that you have the new version of it. So this will be IV lower plot. And again, to find these, all you need to do is go to the ThinkScript collection and you'll find it. So you guys have that now too. So all I'm doing with this is getting a sense of how frequent there's 30-day risk premiums, because this does look interesting from like just a risk premium play, except there's absolutely no liquidity, which is the worst. VSAT. This was a risk premium play. This was from 25 May. So we would have lost here. So that's absolutely a loser. It wouldn't have even gotten to be that bad. So VSAT, that one's a loser. AAP. This was a long strangle that would be delta hedged. This was on 3 June. So this would be fine. That would be profitable. CRWV. This was looking at trading intraday longs from 3 June, which mixed. I wouldn't consider that a win. HIMS originally was a breakout, but they just got smashed today. That's for sure. So HIMS was an instance where there wasn't an immediate entry, but kind of an earmark for an entry. You can actually see where the alert was set. But yeah, HIMS got absolutely smashed today. So that would just be a lingering thing. There would be nothing done there. MVST, this was long calls on 10 June. So those are underwater now. BBAI, these were also long calls on 10 June here. So those are up. Doesn't actually look like a lot, but those are actually up decent. Oh no, these were on 8 June. My bad. Both of those were from 8 June. So MVST as well. So that would have been an entry here. These are actually doing not terrible. This I like better for like a short put style trade though, just because it's like you can see that there's a pretty clear floor baked in. But I mean, there's a lot of calls trading here. There's a lot of calls trading. And man, that's huge premiums though. So super volatile. Coming into earnings on the 31st. How do they look at earnings? Let's see how they typically look. BBAI. Big downside drift. Big downside drift. Literally all save for 2 of the last downside drift. So I like this one, but it's nothing that I would do just yet. I would trade it for earnings, which again, that's on the 31st. So this has been super range bound. So this is the kind of thing where trading short strangles looks pretty good. But then you just have to size it with the expectation of a big move at some point. Lawrence says GNW volume is almost doubled. Oh, interesting. GNW. Yeah. They obviously had some really big news come out here on the 18th. Oh, earnings. Yeah, they had earnings. So yeah, they clearly just had a solid report. That's what I see there. Sweet. All right, gang. Good catching up. I'm out of here. Be an outlier. See you guys later.